Good day, ladies and gentlemen. In one of the videos I posted, a lot of persons were requesting multiple time frame analysis. They said do for us a video about multiple time frame analysis. How to move from higher time frame to lower time frame. But I decided to do this video just to satisfy that particular request. Okay, so the idea behind multiple time frame analysis is simply you trying to find a bias, especially from your higher time frame. You're trying to get a bias from your higher time frame, whether it's a bullish bias or a bearish bias. Okay, so you have no business with weekly and monthly time frame if you are not a position trader. It's position traders that look at weekly and monthly time frame because they hold their position for months, some even hold for years. So if you're not that kind of trader, you have no business with weekly and monthly time frame. You can start your highest time frame with daily. Okay, I don't go beyond the daily time frame. So basically on the daily time frame, you mark out your key levels, or you can use horizontal lines, but most times these levels are usually like in a rectangular form. How will I explain it? Like it's usually a region, not just a line. Okay, so what do we have here? Let me get an horizontal line. So on the daily, this was like the highest point we got to recently. Okay, let me see. Yes, this is the highest point we got to recently, so I'm going to mark it out. I'm showing you how I do my own multiple time frame analysis. Okay, so the next thing is I can see this other part also. I'll mark it out. That was a resistance point, the point of interest. I'll mark it out like this. All right, you don't need to mark out all the levels. Just mark out the ones that look like major, the ones that are like major levels. See, this like a support right there because it supported this price. When price came down here, supported it, then pushed it up. So I need to mark that level also. Okay, another thing you can do is the levels you are marking out, don't go too far behind to mark out levels. Your levels should be recent levels. That way you don't clutter up your chart with so many lines. Okay, it should be recent levels. You can see these levels I'm marking are not too far behind. You understand? Very, very close. You don't need to start going back, then we are marking levels from here. By the time you get to where you currently are, you will see like 100 to 200 lines, and that's not the way it should be. We don't want analysis that leads to paralysis. You see so many lines, to be confused. No, we want analysis that brings clarity. If I notice I'm having too many lines, then I'll remove some of the lines using using the most recent ones. I'll remove those ones that have been there, like are marking out points that have passed so many days, or you understand what I'm trying to say. So I'll do my assessments of the important ones by deleting the ones that are older. Let me put it that way. Deleting the ones that are older, then I'll leave the newer ones. That way I'll have less lines on my charts. Okay, I want to quickly bring your attention to something. There's a video I did. I was talking about the Quasimodo pattern. I can see a big a big ugly Quasimodo on this stuff already just by looking at it on the daily charts. So based on the Quasimodo strategy I taught you now, you have price moving up, meets a resistance, comes down, okay, then goes above the resistance, then comes and breaks the low right here. You understand? Then we wait for price to come back to this level, then we take a sell. Let's see what happened. That's why I told you that Quasimodo strategy is very, very solid. You can see this is the level. This is the level right here. This is the Quasimodo line right here. So we want price to come back here, and this is the, you can see. So imagine you took a sell at that point. Let me zoom it in a bit. So imagine you took a sell at this point. You understand? You would have caught this downward movement up to that point, and between those two lines, I have close to 200 pips. You understand? I have close to 200 pips, so you would have caught like 200 pips. So this Quasimodo strategy is a very good one. You understand? So basically that's how it goes. This line I have to, sorry, Let me copy that. Where is it? Yes, this support right here is also important. It's a recent support, so I'll mark it out. I think that's about all I'm going to mark out for now. That's about all I'm going to mark out. I need this. I need this. Copy. Okay, I want to mark out this other support here. It's very recent. Good. So basically that's all I will do on my daily time frame. So I'm done. Once I've done it like this, I've marked out the recent supports and resistance. I'm done with the daily time frame. Okay, and I also need to look at the nature of the market. Okay, aside from the support and resistance line that I've drawn, I want to look at the nature of the market on the daily time frame. I'm sorry, this video might be long because I really need to show you how I do my analysis. So what's the nature? I want to know exactly what has been going on, what is going on, and what could go on. Okay, so let's see. Before now, price was moving in an uptrend. You can see this. It was moving in an uptrend this way, then later it changed direction. I started moving in a downtrend. All right, creating lower highs, lower lows, lower highs, lower low, lower high, lower low. Moved in a downtrend. Okay, that's the nature of the market. Then it switched again and started moving in an uptrend, creating higher highs and higher lows, higher high, higher low, higher high, higher low, higher high, higher low. Good. So it's moving in that manner, creating higher highs and higher low, higher high, higher low, higher high. But instead of an higher low, it did not create an higher low here, meaning reversal is just by the corner. This is the first sign that reversal is by the corner. All the while we've been creating higher highs. We've been creating higher highs and higher lows around here. Did you notice that? I just showed you higher highs, higher lows. But at this point, I noticed that there is a difference here. There's a difference here. Instead of an higher low right here, it's created an equal low. The low was equal to this one, but it's created an higher high right here. Then it created an equal low instead of an higher low. Then instead of creating an higher high again, it now created a lower high. You would notice that this high is lower than this high. These are signs that something is about to happen. There is possible reversal coming up. So I won't be surprised. My bias right now is that price is going to move down. This is where my supports now come into play. All those major supports I've drawn, they will be the first targets of price if price happens to want to move down. Okay, so the first, you can see I have a red candle already. The first target is going to be this support right here. Next target is going to be this support right here. You understand? So that will give me an idea of what price wants to do. Okay, so I have this. Now there's also support here. You can there's support here. You can put a line there if you want. Okay, but I'm dealing with the most recent, the things I can just quickly look at, where price is going to, or in the short term. It's going to take a longer time for it to come down here. So if I notice that it's coming down there, I can draw the line and expect it to come down there. Okay, but in the meantime, these are the two places it could possibly come to if it continues this is big ugly red candle movements. Okay, all right, so next I'm moving to my h4. Good. So on the h4, what can I see happening on the h4? Let me zoom out a bit so I can have a clearer picture. Okay, on the h4 I can see let's see, I can see a trend line break. Give me a trend line. Let me see something. Okay, I can see a trend line break around here. Do you see that? Let me move this way. Okay, I can see a trend line break, an upward trend line. Market was moving in an upward direction. You see that? Then it broke around here and started moving down. That's what is happening. Can you see? And it is similar to what happened here, if I'm not mistaken. It's similar to what happened around here. Give me on that trend line. Okay, let me see. Similar to what happened around here. Draw that up. Similar to what happened around here. Price was moving in a kind of upward sloping trend line. Then what happened? We had a break. We had a break around here. Then price moved down. Does it make sense? Yes. So something similar is always happening here. We had a break and price is moving down. So definitely I'm expecting you would notice something. What can I get? Let me get an horizontal. No, I don't need an horizontal line. Let me just use this normal line to mark it out. You would notice that this horizontal line here, when price broke the trend line, it's got down there. Okay, this supports there. Let me see. It implies that there's a possibility that these supports right here are going to be targets. You know, this one also will be targets for price to get to. Okay, so generally I'm looking at a situation whereby price is going to meet this support under here. You understand? And by extension it could also come down here if it were to continue in the downwards direction. Okay, so what else can we look at? Once I have my what's it called, once I have my bias that everything is pointing in the downwards direction, then I go to my entry time frame. It's either going to be my 5 minutes or my 15 minutes. So let me go to my 5 minutes time frame. Then in my 5 minutes time frame, I'll look for maybe a fair value gap. You know, you can see this bearish movement, these red candles. Since look at these red candles, I would check if there is a fair value gap there. Since I'm since I'm bearish in my sentiments, I'll look for a fair value gap. Then I'll mark it with two horizontal lines. You know, let me see. So this is a fair value gap right here. Yeah. Let me copy that. Okay. So you can see price has already tapped. Then price has already tapped into the fair value gap. You see that? So price will tap into the fair value gap in order to continue in the bearish direction. So I expect price to come here, which is what it has already done while I'm explaining all of this. You know, then shoot in the downwards direction. And what's the target? The target is going to be down, down, down. Where is that my horizontal line? Yes. So I'm expecting it to come down here. This is a 5 minute chart. That's why it's looking small and the space is looking big. So this is where I'm expecting price to come to when it is done tapping into that fair value gap. You understand? So basically that's how it goes. You can see price came up, tap into our fair value gap, and if you took your entry at the fair value gap, stop loss above the fair value gap, or another system of placing stop loss if you took entries in the fair value gap. Fair value gap usually have three candles that form the fair value gap. You can place your stop loss above the first candle. You understand? Just probably a peep above the first candle. So these are the three candles that form the fair value gap. This one, and this one, and this third one here. So I can place my stop loss just above here. You understand? Above the first candle. Take my entry probably at the middle, though some persons can decide to take it at the edge of the fair value gap. It all depends. Just make sure you're using right risk management. You understand? So basically that's how I do my top down analysis. On the 5 minutes time frame, I look for opportunities to enter. I can also enter on the 15 minutes if I want, but you know, 5 minutes makes it clearer. Like if you enter with 15 minutes, sometimes your entry might be a little bit delayed. 5 minutes gives you like a more zoomed in opportunity to enter, which will even favor your stop loss positioning. All right, if you have any question, you can ask in the comment section. If you are a new viewer, please subscribe and turn on the notification bell. I'll see you in the next video.